I want to welcome everybody to our webinar. We're going to get started in just a few minutes with our panel today on all things insurance. I do want to thank our corporate sponsors that we have for this year in support of SCORE. We'll just give it one more minute to get a few more people joining. Okay. And I'm going to introduce Jack Lynn with First American Title. He's going to give a little bit of an overview of what we're going to be talking about today. So Jack, if you want to take it over and we'll get started.
Thank you so much, Jody, and welcome, guys. As we were in shelter in place, we had a lot of questions that arose around the different disclosures and around title and around kind of just around the affiliates. And so we put together this panel. So it is my pleasure to introduce Anita. Anita is with Steberg Law, and she is going to be our moderator for today. So she is going to kick it off and introduce our amazing affiliate panel that will bring some really great updates and some kind of new situations that are going around our community. So Anita, take it away.
So thank you, Jack, and thank you, Jody. As Jack said, my name is Anita Steberg. I am the CEO and founder of the Steberg Law Firm, which is in San Jose, California. And like Jack said, there has been a lot of questions that they have had regarding real estate, insurance claims, disclosures, coverage. And so Jack put together this wonderful panel and to make sure that you get the most up-to-date information and that you get your most pressing questions answered. And so on the panel today, we have Kyle Chung, and he is the principal of Kyle Chung Insurance Agency Incorporated. We have Emil Fox with First American Title. We have Iris Littrell at First American Title, Kelly Murray at Divorce This House, Brooke Coleman at First American Title, and she is joined by Jackie Ryan of First American Title. So to give you a better idea of each of the individuals and explain about a little bit about their business and explain about what their expertise in, we're going to start. I'm going to have everybody introduce themselves and say a couple of words about their business for a few minutes. Kyle, will you start us off?
Yes. Hi, good morning, everyone. Thank you for Jack's invitation to attend this panel, and thanks Anita and Jody for hosting the meeting. I'm Kyle Chung with Kyle Chung Insurance Agency, and I have 13 years in the insurance industries, and it's my pleasure to share my knowledge, especially in this pandemic time, so everybody knows what's going on with the insurance industry and how to react with it and what kind of benefit you may be considering getting at this point of time. Thank you.
And we are going to go to our next panelist, Emily Fox. Emily, tell us a little bit about your business, who you work for, and what your expertise is in.
Thank you, Anita. Hi, I'm Emily Fox, and excuse me. I am First American Title Insurance Company. I am underwriting counsel, and so I work with our title and escrow folks out in the field on high-risk transactions and high dollar amount transactions. I am fortunate enough to participate in our corporate and national underwriting calls where we are kept abreast of all of the developments, the new developments throughout the industry, throughout the nation in connection with matters that affect our industry in this challenging time. So I'm here to talk to you about a couple of those things today. Thank you.
And we will switch to Iris Littrell. Can you
Good morning.
Yourself and tell us a little bit about your business and tell us what you're going to be speaking about today?
Thank you so much for this invitation. Also, I'd like to say and wish everybody to be well and safe at this time. I have worked for First American for over 25 years and have taken care of Silicon Valley and many of my clients for those many years. There's a lot of changes in the industry, and there's some new things, new products, and that's what I'm going to be talking about this morning, and hopefully I can answer any of your questions.
Perfect. And Kelly, will you introduce yourself and tell us a little bit about yourself and your business as well?
Hi, I'm Professor Kelly Murray, and a few weeks ago, SCORE hosted a webinar that I taught, Get a Clue Report Before Closings and Listings. I'm here to remind you that that's available as an on-demand resource from SCORE. And if you have questions about insurance claims history, both in residential real estate, pandemic-related real estate, and divorce real estate, those are questions I can answer. So I've been researching because I'm also on the faculty of a top 20 law school. My academic focus has been housing and financial justice and family courts. So I've been researching divorce real estate for over 10 years. And what's so interesting about house insurance, it's a really dangerous aspect of divorce. And of course, Clue, those insurance claims history reports, tie those pieces together. Thank you.
And Brooke, will you introduce yourself as well as Jackie Ryan?
Sure. Hi, my name is Brooke Lewis, and I am the Director of Sales for actually JCP, Natural Hazard Disclosures. Jackie Ryan is here with me today. She's the local rep for Santa Clara County, so her familiar face will be one that you all recognize, I'm sure. But we were introduced as First American, so just to clarify, we are owned by First American Corporation. However, we're really proud of the JCP brand and the longevity of that in Santa Clara County especially, and it's really how we're known. And although we don't have anything super new to share in this kind of crazy time that we're in, we are here to really just stress the importance of our stability for all of you and just kind of keeping things safe for you in regards to your disclosures on the NHG side for any listings that you currently have or are a part of as a buyer. So looking forward to talking more about that today, and thanks so much for having us.
Perfect. So now that we know who the participants are and a little bit about what they'll be talking about, I'm going to start it off with Kyle. But before I get to Kyle, something that has came up over and over is our world has changed. Unless you've been living under a rock, you know, since about March 15th, 16th is when Santa Clara came in the shelter-in-place order. We are in the middle of a national pandemic. We are coming out of the shelter-in-place in stages. And so insurance has played a very important role, and what you need and the steps to do it and the type of things that nobody would have thought about maybe 6 months ago, all of a sudden is taking a front and center stage. And so once again, we just want to bring you the most up-to-date information, all things regarding insurance claims, disclosures, and coverage. If you have any questions, we will be answering those at the end. Put those into the Q&A message box on your screen. It's at the very bottom. Chat, if you want to talk with any of the participants, you're more than welcome to use the chat box. But for the questions, we will be pulling them out of the Q&A and we'll be answering those at the very end. Kyle's going to be touching on PNC, business disruptions, loss of tenants, claims, and healthcare reopening of enrollment. And he's put together a mini presentation for us. Kyle, can you share your screen and have the presentation going? And I'm going to turn the time over to you.
Okay, thank you, Anita. Thank you for the introduction. And let me try to see if I can share this. Okay, does it work?
Yep, we can see your screen.
Okay, great. All right, thank you, Anita. And again, this is Kyle Zhuang. Real quick introduction, and we go into the topic. And I want to thank Jacqueline for the invitation during this challenging time that I'm able to share some of the questions that have been asked frequently and hopefully also in part related to real estate or real estate business insurance part of questions to be addressed here. Real quickly, a little bit about myself. I've been in the industry since 2007. I have a designation in the Life Underwriter Training Council. Also, I'm a certified insurance agent with Cover California. I was serving in the Silver affiliate board for 2 terms in the past. My agency basically offers all multiple lines of insurances. So that's why I'm trying to cover is a little bit of everything that I know about so far. And the situation is still evolving. So there will anything I mentioned today might be different tomorrow. Just a little bit disclaimer. Anyways, so firstly, I want to touch, I'm going to speak in two categories. The first category is the property and casualty insurance related information. As we all know, many people due to shelter in place are staying home. So a lot of people drive less, and in response to the situation, many insurance carriers offer credit or discount to their policy holders because of the less driving and declining auto claims. So the refund is automatic. You don't need to apply. Most of the company, including Farmers, refund about 20%, 25% in April, 15% in May, personal auto premium. State Farm also announced they are returning 20% of April and May premium. Everybody's following the same trend. AAA also offer refund. Geico also refund 15% premium for the next policy term, 6 or 12 months. So you can find that information. You don't need to apply. I think all the insurance carriers are doing that automatically. It will show up in your either refund check or credit card that you make payment with. More importantly, because of the financial difficulties, insurance companies are required by the Department of Insurance to hold on to the policy cancellation, which means the grace period will be extended mostly by end of May. So it means that if your policy due by end of March or sometime in April, you don't have money to make a payment or you forgot to make a payment, the policy usually will be canceled within a couple of weeks after the grace period. But the grace period was extended to mostly end of May, depending on the carriers. And as of last weekend, I just got a note from Department of Insurance. They are asking for the carrier to extend this grace period to sometime around July 14, which means that you're gonna see a longer grace period for the insurance. This is applying to all the insurance lines, auto, home, life, health, and those kind of lines. But extension doesn't mean you don't need to pay the premium. It just means that you can pay the premium later. So if you are making the payment, you start making the payment until July, you still owe the premium all the way back from March to July if you are continuing the coverage. So you need to pay attention on that. It doesn't mean the insurance companies waive the premium. They just basically give you more time to make the payment. And a little bit about coverage enhancement and consideration. Because of this challenging time, a lot of restaurants are not allow customers to dine in. So more and more food delivery is open up for the restaurant owners. Typically, an auto insurance doesn't cover food delivery because it's a business use. But some carrier, they are in this particular time allowing that to be covered. So pay attention to that. And as you know, including my kids, we all now work from home. My kids are all using distance learning. They're using computer every single day. So there's an increasing identity fraud or the kind of cyber crimes these days. Everybody need to pay attention to. A lot of homeowners policy covers identity fraud or credit monitoring services. So I encourage everybody to check with the insurance agent, find out if that's an option for you. Finally, with some of the good news, there's always some kind of negative news. As we know, a lot of business cannot open their store because of shelter in place. So there's an increasing number of claims for business interruption, or some of the people they cannot rent, they are losing rent from their tenants, losing of rent. I got a lot of questions on this, and unfortunately, disease generally is an excluded cause of loss in most of the policies we saw. So even though business owners are trying to find a way to recover their losses, I've seen most of the claim being declined because the adjuster find that the disease is not really a cover loss in the policy languages. Being said, we still encourage customer to file claim because every situation can be unique and different. Insurance companies are actually looking at every single claim and do their best to find a way to help the clients. On the Department of Insurance, I found some information about, there are people asking about whether workers' compensation will cover COVID-19 related disease. I found that Governor Gavin Newsom actually made a statement, say that they will make a rebuttable presumption if those workers are tested positive for COVID-19 or were diagnosed with COVID-19 within 14 days of performing a labor, they might be able to get coverage for their workers' compensation. This is stay in the state of California. So every state might have different rules. That's why I encourage everybody, if it's due to work-related, if you are not sure, just file a claim, let the claim just know it, and they'll look at it to give you an answer on that. But generally speaking, disease is mostly excluded from any policy that I've seen so far. Next, I want to cover a little bit about health and life. Most of self-employed people, including myself, we might be purchasing medical insurance ourselves. Cover California just announced that because of the COVID-19, they opened up a special enrollment period during March 20 to June 30, which means that if you missed the open enrollment beginning of the year, now you have the opportunity to buy a medical insurances. Why it is so important? Because the treatment for COVID-19 can be expensive, and all the medical insurance carriers are doing something to help the individuals, including free COVID-19 testing and screening services. They waive the copay, co-insurance, or deductibles for COVID-19 related treatments. And they also have expansion on emotional mental health coverage. People are really stressful these days. They mostly also offer telehealth visits. So try to take advantage of those additional services if you can from your medical insurance carriers. I want to quickly touch the enrollment. So if you don't have medical insurance right now, or because you lost the insurance because your spouse or you lost from your current employer, you can either go on to not just Cover California, but most of the individual medical insurance carriers are accepting application right now. So sign up. Or if you are losing coverage from your group, you will have the COBRA election deadline extensions. Traditionally, if you lose coverage from the group, you have about 60 days to decide whether you want to join COBRA or not. But this has been changed. So until the state of emergency is lifted, the extension will continue until the first day the national emergency lifted, and another 60 days will follow. So for example, if a person lost coverage from work on April 1st, and if president decided to end the national emergency in June 29th, end of June, that employee will actually have additional 60 days until August 29th to enroll in COBRA. So he has more time. But again, extension comes with cost. So if you decide to join later, you still need to pay back all the premiums from the day you lost coverage, which is April 1st, all the way to the day you sign up. So you need to pay attention to that. Finally, life insurance companies are writing policies. Obviously, people are concerned about the COVID-19 and potential financial hit. There's a change in life insurance application process. I think more and more companies already, they are doing a virtual application online, and also they are relying on more and more of the data or medical histories from the doctor offices rather than face-to-face medical exams. And there will be more restriction on people who just travel from outside, who just had an international travel. They might be delayed in their application approval process. But do take advantage of one thing is a lot of life insurances actually cover a temporary coverage means that as soon as you fill in your application, pay the premium, you will have temporary coverage for a certain amount of life insurance until it's approved. So that means on the day one you sign the application, you might be covered for that temporary period of time. So take advantage of that. I think that's all I want to cover real quickly, even though it still takes some time. Sorry about that. If you have any questions, I will have the slides available, and you can, contact me or ask at the end of the presentation. And again, thank you very much. Hope everybody stays safe, and let's walk through this together. Thank you.
Perfect. Well, thank you, Kyle, for all that great information. I think you really pointed out how things have changed in the post-COVID-19 world. Additionally, I love that you touched on how important it is for claims to know your policy, what's in there, what's not, and also to get a sense from the insurance company and to know them and know kind of what their policies are. I think that's really beneficial. The next person that we are going to hear from, and Kyle, if you have not already stopped it, if you could stop sharing your screen.
I think, okay.
Okay, there we
Try
go.
to find it. Thank you.
Emily is going to talk to us regarding remote online notarizations and potentially any COVID-related claims. And she's going to let us know if she's seen any hard money loan issues since she's on the front line. So Emily, I'm going to ask you some questions just so that we all get everybody on the same page. What is remote online notary? What does that mean?
Question. I think that's a topic of real interest now in the industry. As we all know, in our industry, and particularly for title and escrow directly, what's changed really is that face-to-face contact with customers and notaries, right? When folks sign their documents. So e-closings and questions about e-closings have been, on a lot of people's minds and at the forefront of questions that we are getting. And so, yes, so what is an e-closing? What is a RON, a remote online notary? Let me just start out by saying, unfortunately in California, and then I'll expand on that later, we don't have that capability yet to conduct closings via remote online notary. But First American is monitoring the situation and watching legislation in California, or, the potential advancement of that, and trying to be on the front line so that when it is available in California, we'll be ready. And what's kind of emerged over the country are 4 different kinds of e-closings. One of them I'll dispose of quickly. It's called, for short, IPEN, which is an in-person e-closing where a signer and a notary actually share a tablet and everything is electronic. And obviously, with social distancing, that's not happening. Remote online notarization, the one, again, that really is kind of at the forefront of everyone's mind because we've been hearing about it, because many states had already enacted RON legislation and were permitting it. And California has had bills introduced and discussed, and we've been working toward getting on board. So it is kind of a familiar concept in some regards to people, if not the particulars. And so what the particulars are is it's a fully electronic signing. The signers can be in one place, the notary is in another place. The documents are signed electronically, not what we call wet ink. And they're notarized electronically, and it's done via webcam, and there are identification protocols to confirm that the signer is the person that they're supposed to be. And this is, how closings can be conducted, how notarizations can be conducted. And obviously, in these days of social distancing and not being able to be in the same place and possibly not being able to travel to where a notary is or where your escrow branch is, it would be an ideal situation. Right, but unfortunately, we just don't have the legislative process in place here in California, like some states do. Some governors of states have instituted either emergency authorizations, emergency legislation to permit another kind of remote signing, and that is a RIN, remote ink signed notarization. And that's where sellers, buyers will have their documents. They will ink sign them. A notary will be watching via webcam. Those ink signed papers will then be mailed to the notary, and the notary will then do an ink notarization, and the documents can be sent for recording. What we've seen in other states where that has been implemented don't have the same kinds of identification protocols that most of the RON legislation does. So First American is, very hesitant about getting on board with that. We obviously have concerns about the identification of the people who are doing the signing. So again, our governor has not enacted such an emergency order, emergency legislation like that, so we don't have that available. We're also monitoring this at the national level too, by the way. We're hoping that Congress itself on a national level will put something in to one of the relief bills that they've been working on that will, provide for at least emergency legislation across the board. That hasn't happened yet. So what are we left with? What we're kind of left with is a hybrid signing and notarization situation where documents that are going to be recorded must be ink signed, must be notarized. But other documents that don't have to be recorded can be e-signed. And so that is available in California. That is available specifically in Santa Clara County for the recorder's office. And let me just add, one of the challenges around California's implementing legislation for RONs or even RINs is all of our county recorders have their own protocols. County recorders have to be in a position to accept electronic documents, electronically signed documents. I know we have some e-recordings now, but that presupposes ink signed documents always. So we've got county recorders offices, and we've got most title insurance companies have document recording services. So we've been working with our document recording services and getting memorandums of understanding with all of the county recorders in the state. And I believe that's in place. So when and if the structure, the legislation becomes available, we'll be ready to go. We'll be ready to go with working with getting RONs and RINs going. And let me just add, I will add with regard to the RINs, that's the remote ink signed, that some governors in some states have implemented. Most of those have an expiration period. They're a temporary emergency measure to help during this time when people can't be face to face or in the same place for their notary. Some of our able to operate, but those that's going to end unless it is ultimately made into law. So I think that I'll stop there with regard to RONs and RINs, and then maybe address other aspects of it in any questions that might come up.
No problem. As an attorney, and I go in the trust and estates administration and litigation as well as tax, it's been very interesting to see different states handle this in different ways. Like you said, it's there's about 4 different ways that we see the states break up in what they're doing. And thank you for updating us to what California is doing.
If I can add, and thank you, your comment reminded me what I wanted to give everybody is a First American public facing website where you can go online and get tons of information about all of these different things. And I've got my laptop over here. It's got a great interactive map of the whole U.S. on any state, and it will tell you whether there is legislation in that state and what's what it is and where there's not. So it's a state-by-state online or state-by-state guide to online closing. And let me give you that web address. Unfortunately, I can't share my screen. I'm sorry about that, but it is https://www.firstam, that's FIRSTAM as in Mary.com/title/e-closings. Ton of information. Great website.
And
great
Emily,
resource.
once we're done with your presentation, would you mind dropping that in the chat so that way we can make sure that everybody has access to it, and that way there's no misspellings, you know exactly where they're headed to. They don't get the wonderful 404, we don't know what page you're looking for. If anything is misspelled, that would be very much appreciated. And do you, have you seen any trends in the title industry claims relating to or because of COVID-19?
Yeah, and let me just address that it's kind of a brief discussion because the quick answer is not really. But what I thought I would say, because I know claims, title insurance claims are frequently of interest, out there in the industry. And when I give talks, folks want to know, and we all love a good war story about claims. And I don't particularly have those. But what I did want to touch on is, because we were asked, I checked with our national claims coordinator to find out what are our claims folks seeing out in the field, and we really aren't seeing anything that we can say is directly related to COVID or the coronavirus illnesses. But we do expect an uptick in lender claims once the moratorium on foreclosures is lifted. And those typically come in the realm of a prior and recorded deed of trust. They're just claims that happen when a lender gets a TSG and finds things on the trustee's sale guarantee report that are not on their title insurance policy. So they'll make a claim and that'll have to be addressed. So we do, unfortunately, expect there to be an influx of that kind of claim down the line. And then with regard to hard money lenders, we always in our industry have to be on the alert for fraud. And again, unfortunately, hard money loan, what we call non-institutional lender loans, are higher risk. And they always carry an inherent risk that we've got to be aware of and mindful of when we're underwriting a transaction and looking at, does it look like a deal that we want to insure? So as the economy, slows down, as folks aren't working, and creditworthiness, changes, these kinds of loans might become more prevalent, and therefore it might carry all of that along with it. So we're not necessarily seeing it now, but we know that's something to be alert for, and that's something that we watch for at the operation level, right? We try to avoid kind of happening. And then the last thing, I don't know if this is, it's probably not amusing in any way, but it was mentioned, and so I thought I would pass that along. And our claims folks are seeing a slight uptick in neighbor disputes because people are at home and people have time on their hands. So, and those typically come in the way of, encroachments, boundary line issues and that sort of thing. So that's what we're seeing on that side.
Now, I know from in my practice area, we're getting more and more calls because people are at home, including our most vulnerable, right? If somebody has propensity to child abuse, we see that. What I have been hearing is there's probably more of a propensity also for elder abuse, which, the notaries are basically, they're the front lines because they're coming into a situation where you don't know necessarily what the capacity of the elder is. There's documents that are signed, and a lot of people right now are doing a lot of estate planning where the documents are notarized, and a lot of them are for absolutely the right reasons, absolutely doing it the right way, but it also opens the door for potential abuse for those people who have a propensity that maybe they're at home now with mom or dad has dementia, having the isolation, it's impacting their mental health. And so we're seeing, I know that's one of the discussions that's happening in the California legislature about the RONs, the remote notaries, and doing it. That is very much one of the discussions.
Absolutely. So, thank you.
Thank you so much for the insight. Once again, if you have questions, drop them into the chat or the Q&A, and we're going to answer those at the very end. If it is a question that's sensitive and you don't want everybody else to see it, you can send it privately to, when you open the chat box, there's a little drop-down menu that'll say all panelists. You can also send to somebody individually. If you will send it to me, That way your identity is not disclosed, and that's the way you prefer to do it. It is more than welcome to do it, or you can just put it into all panelists and we will address those at the end. Iris is a very, has a very broad area, and it's something that even though everybody's been sheltering in place, your area of expertise, you've actually been seeing people go out in those industries throughout this time because it was deemed essential. And so Iris is going to talk about constructions, new builds, new options, smart homes, and home warranty claims for people being at home. So Iris, why don't you start talking about, I know that you're going to start talking about coverages and pre-season HVAC tune-ups and 2-year policy. So why don't you lead it off, and then if I have follow-up questions, I will hop in.
No problem. Good morning all again. Yes, I'd like to touch on a couple of things to make it easy. I know most of you have received lots of e-blasts that's been going out to each and every one of you, and along with homeowners with our new options. We have 6 new options that First American has brought into our policy this year. It's been very exciting because sometimes you need more options. And basically, my clients who I've had for over 25 years had asked for them. So we incorporated everything together, put it in a format, came out with a new brochure, which cost millions to make, which I love to tell everybody about, because if you asked, we try to follow through. So those are exciting things like the outdoor kitchens, the HVAC tune-ups, which you can do twice a year. Homeowners can pay up front and have these special tune-ups done in their home for heater and air conditioners, and they're not putting a lot of money out, not knowing what's going on. So that's a great thing. We also have a 2-year plan that's out there for them. They can buy 2 years up front and save on the cost, because you know every year things go up. So we try to save them money in the beginning. We also have a new plumbing package that pays for a lot of the modifications that have to be done. And I've always told my clients, and they know me for this, I say, if you don't ask, nobody will tell you. So again, if you're not sure of something, by calling your rep, and I hope they call me, but I'm talking about all affiliates out there. If you ask, they will answer the question. If you don't, then you're stuck for the problem. And basically that happens a lot in this industry. And the other couple of things that have come up is we have the smart home. Everybody has a different home now. And I take care of the Bay Area all the way from Mountain View to Carmel. Every home is different. Every area is different. And every agent is different in what they need for their clients. And so I try to keep up with it, and so does my company. So that kind of touches on a new one that we just came out with about 30 days ago, is new construction. And I do a lot of policies for new owners and developments. And First American does a lot of this also, title, where they have new developments that come in and there's 10, 20, 30 new homes. Well, we now have $100 off, and this is the only plug I'm going to put in for the first 1 through 10, and then through 10 through 20 is $200 off on each new construction. That saves them a lot of money, and it's beneficial. We've been asked for it. The same with refis. If you refi, you'll get a warranty. Before, we couldn't do that, so now that's also worked into the program. But I wanted to touch on something you were talking about. Since people are sequestered at home, the claims are very high. But does that mean that we don't take care of your clients? We do. And that means we work 24/7. And if anybody knows me, my phone never is off. I work 24/7. So if you call me for a situation that happens, I'm going to do the best I can to get somebody out there to take care of it. But what I've learned from working with this company for over 25 years is they will go to bat for whatever the client needs. We only go to bat for what's in our contract. We do not add things in after the fact, just like you can't buy a car and then try to get it covered when you have all these things on it. We work fairly, like everybody does in the industry when it comes to something they're buying and having their clients be reassured they're going to be covered for 12 months. So again, if it's done right in the beginning, no problems happen. But you know, and I know in this world right now, there's been a lot of unusual situations. And the biggest situation I have is people forgetting to pay. people forgetting to put the order through. And then they call up and say, can you please take care of my client? Well, if it's within the first 30 days, no problem. We can take care of it. You can get it paid. If it's 60 days, you can add any option on that you forgot to add for your client, or they can add on. These are the things that we work together in the industry to make sure when you say you have a home warranty, we want you to be sure you have a home warranty. So when you need that service and you need someone to give you the information, you need to call me. You need to either call your affiliate that you're working with, like JCP, who is our company affiliate, and I am the home warranty rep for title. I don't work under title, but we work together very closely. I'm the only home warranty rep in the Bay Area at this time. We have many reps in other areas, but for me, I've been around here for a long time, and I've learned to notice when somebody's in trouble. They'll give me a call on my phone, and I will call them right back and say, what can I do for you? This is how we work together. I hope that answers your questions. I'm pretty quick, but I always take questions up front.
So what type of claims are you seeing, and what should people do to protect themselves? You're seeing, because you said that you've seen more claims since everybody's at home. What type of claims are those?
Well, what would you think the biggest claim in the home that everybody uses every day, 2 or 3 times a day? Bathroom.
Air conditioner, the weather, the air conditioner, the heater, maybe the stove or fridge.
Bathroom piping. Biggest claims right now are, besides those things, there is a lot going on with HVAC, but we're not in the heat season yet. It's coming. And I do tell my clients, please check your policy, because when I send it out to them, I highlight everything in yellow. I even have these little stamps to remind them that if you don't have the right coverage, call me now, so they know that. But the biggest claim issue right now is plumbing, because everybody is at home. You have 3 kids, 4 kids. If you have an escrow that closed last week and just a mom and pop that lived in that house, or mom and granddad, there's really no bathroom issues. And then all of a sudden 6 people move in, and everything from the dishwasher to the garbage disposal to the bathroom to the upstairs leaking through the ceiling, and people going, I never had that problem before. Well, it's going to happen. You've got 6, 7 people, and sometimes grandma and grandpa's living with them. So it could be 9 people living in a house. If you do not have your pipes cleaned out every once in a while, it is going to back up. So that's the biggest one. And we try to get somebody out ASAP, but we tell people, turn the water off if there's a pipe broken. Turn it off. You know where the switch is, learn where it is. The other one, again, HVAC will come up, and you need to check your policy to make sure that you have that coverage, because every day, or at least once a week, somebody will call and say, I didn't know I didn't have it. Well, you got a contract. It was sent to you, and the policy indicates everything that you're covered for. If it's not in there, you need to call us right away. We make it, capable for them to change or to make it right. But you'd be surprised. Everybody right now is under such stress with their kids and teaching the homework and trying to get their bills paid, and maybe they lost their jobs. Maybe that'll happen. But they still have a policy. If it was paid for 12 months, I will take care of them.
And that's great advice, and goes back to kind of what we've heard from multiple presenters at this time, is know your contract. Take it out, dust it off, find it, keep a soft copy. As an attorney, we are constantly looking at contracts. Well, somebody calls us, says, I have this issue. What do? You look at the paper. You look at whether it's a trust or an estate plan, whether it's a contract for homeowners, a policy, whether it's your medical policy. It all comes down to how important those pieces of paper that people sign every day and never think about again, how important it is to review those, and how important when there is an issue to dust that off and to look at it, find out what's covered. And if it's covered, assert your rights on them and call somebody like you.
You'd be surprised how many people do not look at the last paper they signed. They're so excited about getting the house, and I'm excited for them also. But if they find it, and you have within a period of time, like I said, 30 days, some contracts only give you 10 days. We give you 30 days, and you find that you're not covered. The other big issue is we didn't receive the money, whether from title or the owner or a credit card. Because one will say, no, 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 the owner was supposed to pay for it. Well, the owner forgot to pay for it, and that was 4 months ago. Do you go back? Well, we need to look at every situation. There is every situation. And right now it's a very difficult time for a lot of people. And we do honor a lot of things that probably are strange to some. But you know what? We're here to all work together. Isn't that what we're supposed to do? We're supposed to be here together for each other. And it is difficult, but we want to make it easy for you. So if you didn't get something, call your company. If somebody didn't sign it or didn't send a check, I tell clients every day around the holidays, make sure you ask for what that check number was that went out from escrow, because 9 times out of 10 in the holidays, that one might not get there. And if it doesn't get there, and then your homeowner calls you, who's going to look bad? I'm not going to let you look bad, but I'm just going to say, who's going to really look bad? Because you didn't bother to tell me I should have done that. So those are little things that happen. We're all talking about legal paperwork. Everybody needs to be responsible for reading their own contracts, like you.
And that is a great segue to our next person, and that is Kelly Murray, who's also an attorney, and she has her own company called Divorce This House. And Kelly had mentioned that there is online through the SCORE webinars on demand. She has put together and has done a whole webinar just on the Clue report and other related topics. So if you want to go into a deep dive, check out that webinar that was previously recorded with Kelly. But Kelly, I want, since you were our resident expert on the Clue report, you want to explain what it is and what is necessary, especially during this COVID-19, because it has drastically changed the landscape of the Clue reports.
What's been so interesting, I've taught this Clue class, so get a Clue report before closings and listings, at the NAR National Expo twice, 2018 in Boston, 2019 in San Francisco, and now for SCORE. So please take the opportunity and watch the full webinar. But one of the interesting statistics, there are 2 national surveys, 2014 and 2016. Hey, America, what's a Clue report? And we now know America is 3% even more clueless about Clue. 2016 has an uptick of 3% more who have no idea what it is. But in terms of residential real estate and then real estate during the pandemic, my one concern, this is how I learned about the Clue report. I've been teaching divorce real estate to real estate licensees and mortgage professionals since 2008. And in my 3rd class ever, someone raised their hand and said, what about the Clue report? And I had no clue what a Clue report was. And she described it to me this way: roof, that's the big ticket item in an insurance claim. Someone takes the roof money, which could be $8,000, $14,000, depending on square footage, and instead of repairing the roof, they buy a car and go on a vacation. Now, during sheltering in place, they may not be going on a vacation, but what if they have significant other expenses from furlough or job loss? And so they divert the insurance money, and that will be something to look for. That could increase. So if you receive this check, you filed a roof claim before the pandemic, you get the money, and now you've lost your job. What may people do with that money? But if they don't repair the roof, what happens? So for example, a roof exposes your structure to the elements. If your house is further damaged because you didn't repair the roof or didn't properly repair the roof, not only is that new damage not covered, you may lose your coverage. So those are some of the things I'm concerned about with the Clue report and house insurance claims during the quarantine, which is in various states of reopening, but still plenty of people are not engaging in all the activities they used to. And so it's connected to filing a claim, receiving the money, and then not using that money to repair the house. It's not like the insurance company will never find out about it, because they report the insurance claims to the Clue database, which is owned by LexisNexis. They bought it in the early 90s. And so the reason why I became interested in it is because Clue has a unique role in divorce real estate, which is where my academic focus is. And so people dissolving their marriage, one of them may have diverted some of the money, and then that becomes a divorce issue. So we don't cover that in the webinar, but we really do cover most of what I'm introducing in the Clue webinar, Get a Clue report before closings and listings, that's on demand with SCORE.
Perfect. And I appreciate it. And so that gives us a great segue to talk to Brooke. And Brooke, I'm going to have you once again introduce Jackie, and then I have some questions that I'd love to ask for you.
Okay, great. So again, my name is Brooke Lewis. You see Coleman on the screen. It's my maiden name. But I am the Director of Sales for Northern California for JCP, Natural Hazard Disclosures. I've been with the company now for almost 14 years, so I love any opportunity I can to speak with all of you and kind of share some of our goings-ons in our world. Jackie Ryan, again, is your local rep. She's on with us as well, so we'll make sure to get you Jackie's information too. But yeah, it's great to be here. Thanks.
Perfect. So we talked a little bit about the clue reports. What are disclosure reports and why are they so necessary?
Good question. You know, unlike a lot of what we're talking about today, the JCP or the NHD report, the Natural Hazard Disclosure Report, isn't necessarily an insurance product, but it almost feels like one because it is sort of a sense of making sure that the seller is insured in a way, and that the buyer is as well, and the information that they're getting from the seller. So it's really a liability issue. It's not only that, but it's also required by the state, which a lot of people just don't realize that for any real property transaction, it's required, whether it's a new build, commercial, residential, anything that is transferring hands, it is actually a requirement in the state of California that you have it.
And there's another, it's a disclosure. Can you tell us what a PACE disclosure is and why that information is important to a transaction? And maybe tell us how that's a little bit different from the JCP disclosure reports that you were just talking about.
Yeah, so the PACE disclosure, well, just to kind of, for those of you on the call that don't know what a PACE lien is or a PACE loan, some areas know it more than others. Santa Clara County, there's quite a few of these loans in a transaction, but what it is it's a property assessed clean energy loan on a property. It can be anything that from solar panels to special heater for the pool, new windows, anything that's going to be any type of energy efficiency item. It's a loan that a homeowner can get. Again, it's called a PACE loan. Oftentimes it's called a HERO PACE. HERO is the funding entity for that. But the misunderstanding is that this is just a loan, when actually it's a lien on the property and it takes first position. So it's caused quite a bit of chaos, if you will, in some escrows. And right at the close of escrow, one will find out that this particular lien has to be assumed by the buyer, which takes an approval process, or the contract may state that the seller has to pay it off, which the seller may not be in the position to do, which is why they had a loan in the first place. So it really can cause some confusion. It's something that is really important to disclose and know about right up front when there's any interest in this property. Upon listing, as a listing agent, it's really best practice for them to ask the seller if they have this particular type of loan or lien on the property. One thing that we do that might be helpful is that there is a way that this is actually disclosed in our product, and title can help you with this as well. It is in the prelim. There's an overall amount that'll be in the prelim of the property, but there's not as much detail. So escrow and title are really looking to us to help provide that information to potential buyers and even sellers who just don't have a copy of their contract on hand. There can be a lag time by relying on just the county records, just because the county doesn't update its records more than once or twice a year. And so there can be a chance of missing this type of loan on a property. So we monitor it daily. We make sure that any loan that's in front on that property, that's this PACE energy efficiency loan, will be caught in our report. And not only will we disclose it, but we'll also provide a contract, which is really important for title and escrow, as well as the buyer and sellers, to understand exactly what they need for this close of escrow or this transaction.
And how does the JCP disclose on PACE? Is it a certain line item we're looking for?
Yeah.
Is it a packet? Tell us what exactly we are looking for.
Good question. So in our tax report, you'll see that we actually state yes or no that this particular property has a PACE loan on it. With that said, in the tax report, we will also, if it's a yes, we will give a copy of the contract so that, again, that can be shared with anyone in the transaction that may need to see it. And each contract is different in regards to how it's going to affect the seller or the buyer. So it's something to definitely look for. And one of the catches about these PACE loans is that they actually, the payment towards them actually comes out of a homeowner's tax bill. So oftentimes homeowners forget they're even paying for it, to be honest. They also just don't understand the ramifications of the contract and what it states and how that's going to affect the sale. So we've heard extreme cases where even a homeowner selling their property has then gone into foreclosure over a PACE loan that they now don't have the money to pay off, but they can't sell it without paying it off due to the contract. And so they're really stuck in this house that they maybe needed to sell. So again, talk to NHG, talk to your title, and the two of us together can really provide you with the information that you need to know about it with each transaction.
Becomes very important in real estate transactions when you have something that's unusual to immediately, if you're the agent, to talk to your title officer and to talk to the different entities that may be involved to get the information to resolve these so early, because you don't want to find out there's an issue the day before closing, or worse yet, the day of closing as you're signing the document.
Great point, Anita. And with that said, we really urge you to order your report at the time of listing. In these crazy times, I'll go ahead and touch on what we're all going through and how it's impacted everyone. We still want you to order reports. I know a lot of agents have either pulled listings off the market or they have them coming soon, hoping that things get better and better. And we're seeing that, right? We're seeing a slow uptick of things getting better. We just want you to know, as your partner, that we don't want you to wait. We want you, even if it's coming soon, order the report now. You don't have to pay for it until it closes anyways. So it really would be helpful, and it really is crucial to know, again, kind of that insurance feeling, right? Even though we're not an insurance product, it's your insurance, your liability possibly on the line, as is the sellers and the buyers assuming all of that. So they want to know right up front.
And they can always update it, right, Brooke?
Yeah, good point. They can always update it. Yeah, no charge. If they have it coming soon and they order it now and then it finally hits the market in a few months, we can update it.
And I'm going to switch topics, I think, a little bit on you. So tell me about owning your own tax department and why that's a benefit.
So again, kind of just go back to the liability of a transaction. It's not just our liability we worry about, it's the agents. And we want to make sure that we don't defer any of that liability to a third-party company. Instead, we want to take the onus for the information that we're giving. So we do own our own tax division and data. It allows us to, again, not only defer liability, but to also make enhancements such as this daily PACE loan monitoring system that we have, where we don't rely on the county or any other third party. Again, not only that, but it also gives the assurance that you as an agent have someone to talk to if there's a question. Like I said, I've been doing this for years. Jackie's been doing this for years, but I still am learning literally daily and don't have all the answers, but our tax specialist does, as our geologist does. So we provide all of the right resources. And so by owning our own tax division, that's just one of the benefits and ways to protect themselves as agents.
So let's talk about, there's different levels of determination, and there's 6 mandated statutory requirements. Tell us what those are and why it's important to look beyond the mandated statutory requirements.
Sure. So the 6 statutory requirements really are a combination of all things fire, flood, and earthquake, with 2 in each of those areas of determination. those of course are required and very important. But what we do is most companies do this, but us as well. It's really important to dive into your local levels. I always say that I know my backyard better than I know my neighbors. So I know exactly where the shade hits and how everything grows and that kind of stuff. Sure, I've seen my neighbor's backyard, but I couldn't tell you those things. Kind of the same concept. The state has its own maps. They know their backyard. However, each city or county truly knows what affects that area. So one thing that we do different is we work really closely with the city. We use their safety element in their general plan, it's called. So we make sure that we literally drill down on a city level, as well as the county. We don't just cover, local things. We make it really specific to the city and to that specific listing. And with that said, why is that important? What people don't realize is that really what makes the NHD important is that anything on that property that we may make a determination on could ultimately affect a buyer in a couple of major ways. One of them being financially. They might need flood insurance, anything to do with fire, et cetera, that might cost them extra money. And then also, if they want to build on that property, even to the point of putting in a pool, they have to get permits for that. And if they're in an earthquake fault zone and they aren't told that on a city level, and then they go to the city to pull a permit for that pool, and they're told, oh, sorry, you're in an earthquake fault zone, now you have to have a survey done of your backyard to make sure that it's stable enough for this pool to go in. That can cost tens of thousands of dollars. So immediately I would imagine a buyer would go back to a seller or an agent and say, why didn't you tell me? I was in an earthquake fault zone. The state said no, so I believed it, but the city, you didn't give me city information in this particular report. So we make sure to go down to the city because they do sometimes disagree. And so it's important to cover all levels of jurisdiction.
Absolutely. And we hit on it a little bit before, but I just want to hit on it again. Why is it important to report, to order the report up front when you take the listing versus waiting? I know we hit on it a little bit. I just want you to.
No, it's okay. Yeah. Again, it's just a matter of being prepared. I mean, disclosures can be scary, as we all know. And I think especially these days, I think that if someone is looking to buy a house, there's already a lot of emotion going on right now and a lot of fear about even stepping into someone's home, let alone what they're taking on with it, So I think in these special times, as well as any time, you just want all the information up front, even if it's not necessarily rainbows and sunshine, and it does say you need flood insurance, et cetera. There's information we provide on deeper levels with flood certificates and contracts and things like that, that sure, that it may be a determination that you didn't necessarily want to hear, that it's in a flood zone, but a flood certificate we provide you could tell you more detail and make sure that everything's okay. So it's just knowing everything up front, having time to deal with it and getting all the facts, or maybe walking away from that particular listing, but trusting your agent and thanking them for providing you that information to feel good moving forward with that agent to the next listing. So it's a relationship builder as well. So yeah, go ahead.
Oh, sorry. And then also waiting till the 11th hour and then having to deal with the possibility of the 3-day right of rescission, right? They can.
Yep. Yeah, our report is part of the 3-day right of rescission. So it is a tool that some people can use if they want to back out of a transaction or a closing.
And I assume that JCP offers the clue report that we have talked about, and that's
question. So I'll have to work more closely with Kelly maybe, but that's a good question. So we used to provide the clue report, and there's a lot of communication going on about this because of Kelly's recent presentations, which sound great. I can't wait to hear one. Unfortunately, no third-party provider, as far as I know and have been told, is allowed to provide a clue report anymore or order a clue report anymore on behalf of an agent or a seller, as we used to do.
Clue is now covered by the FCRA and the FACT Act, so the Federal Credit Reporting Act and the Fair and Credit Transactions. And so that's why no longer can NHD or anyone give you a clue report. Only the named insured can contact clue, and then it's sent by clue to the subject property. That's the only way to get a clue report. Now, insurance underwriters see it. So the buyer's insurance underwriter has, by subscribing to Clue as an insurance underwriter, can see it. But the report itself can't be given to the buyer, only requested in the offer to the seller. That's the buyer's route.
It was a sad day when we had to stop offering
Yes,
that. All NHG companies are in the same boat. Unfortunately, that was definitely something we loved to promote and sell, and it was a staple in Santa Clara County, especially. It was like 90% of our business ordered Clue reports, so it was huge. So with that said, we do always steer them to the LexisNexis website, but like Kelly said, we cannot do it for them, and it actually sounds like it's a little bit of a process. And then we also refer them to their insurance agents, because I know that the insurance companies can help provide some of the same information as well. So as much as I'd love to say, yes, I can order the Clue report for you, we can't, but at least now we know why. So hopefully that kind of sets the record straight a little bit.
And I know for real estate litigation, number one litigated issue are disclosure issues, issues and report issues. So something's been not disclosed properly. So I'm always, everything is about protecting both parties. So we're going to go to question and answer. And I want to remind Emily, if I didn't see it, and if I overlooked it, I apologize. I want to remind you to put the URL for First American website into the chat.
Jody added that for me.
Perfect.
Jody, I can't find the chat function. I'm on my iPhone, so.
Got it.
Catching up with this kind of technology. But anyway, it should be out there, and if you haven't seen it, I'm not sure. But hopefully Jack or
there it is. Yep. The interactive map. Yes, Jody put it in there. She has us all covered. So thank you, Jody. I was waiting for it to come from you.
Great.
I didn't see it from you.
Oh, okay. Yeah, that's why. Thank you. Thank you all.
So we have a question. This probably, I think we got it while Kyle was doing his presentation. And that if the insurance cancellation grace period is extended until July, when is the arrearage in insurance premium due?
Typically, as far as I can see right now, most of the insurance companies extend their grace period to end of May, although the commissioner was asking for 60 days from March 14th, as I also post on the chat note. I see many insurance carriers actually extending to end of May. From what I can see right now, before we make additional extension at this point, if the policy is left unpaid, after this grace period, the policy will cancel, backdated to the original renewal date, which means if my client had an original renewal date on March 14th, she or he failed to make a payment by the end of the grace period, typically insurance company will cancel the contract by the original renewal date, which means that there might be no coverage during that period of time if they fail to make the payment. If there's an accident or loss happen during that period, they may not be covered. A lot of times when customer file a claim and they are in the grace period, the insurance company will ask them to make that insurance payment before they can actually process a claim. So people need to be very careful about arranging the payment. Again, the grace period doesn't mean you don't need to make a payment. It means you have more time to make that payment, but you still need to pay to keep your policy continuing.
Absolutely. And once again, if anybody has questions, drop it into either the Q&A or if you want to put in the chat. We're monitoring both of those. We hope that you have gotten a lot of value out of this, had your questions regarding insurance claims and disclosures and coverage answered. I just want to remind anybody who is attending this, whether it be online or on the replay, you are more than welcome to reach out to any of the panelists. I don't believe I'm out of line when I say they would all, if you have a question, they are more than welcome to answer those questions, and they are more than welcome to give you whatever information you have, because something that everybody here has in place with them is we come from an area of service. We want to make sure that you have the information, make sure it's correct, and make sure it's up to date. And in the post-COVID-19 world, the world is changing, and so some of the information as we give it today is the best information we have. That may or may not be if you're watching this a month from now or 15 days from now or 60 days. So if you want to check and double check any of the information, please feel free to reach out to any of the participants if you have questions.
Anita, can I add one thing about the clue report real quick?
Pardon me?
Can I add one comment about the
please.
clue report that Brooke and Kelly just talked about? So I always encourage the realtors to tell your buyer as soon as they are in contract, contact the insurance company to get a insurance preliminary proposal, because they'll be surprised to find out that there may be some loss histories or maybe some situation in the fire hazard that prevent them from getting a affordable insurances, because there are people getting insurance companies right now are restricting their underwriting guidelines due to the wildfire fires in the past years. So I see harder and harder for the buyer to purchase property insurances in particular areas. And with more and more claims being paid, I'm seeing the trend to be more restrictive in terms of securing a homeowner's insurance. So that's always a good idea to check that in the very beginning, rather than the day before closing and realize their property insurance will cost them like $5,000 or $10,000 a year and become a deal breaker. Thank you.
Absolutely. And we have a question that somebody missed the beginning portion of it. And I just want to remind anybody who missed any portion of this, whether you weren't able to come in with us at the beginning or whether you had to leave, this is being recorded and SCORE will have it available at a later date. They're going to put it, it is being recorded. So you will have the opportunity to utilize it and listen to it at your leisure later on.
Yep, it will be posted a little bit later this week.
There you go. Jody's confirmed, if you didn't hear it, that it'll be posted later this week. In my area, like I said, I do trust and estate administration litigation. I also do taxation. There has been a lot of tax updates regarding COVID-19, not only at the IRS level, but there's at the state level, additionally at the local level as well. So there has been a lot of updates regarding sales tax. You can now defer some sales tax. It's deferral, it's not forgiveness. There is a deferral for small business and employers to defer their portion of the payroll taxes. The IRS, if you owe the IRS money, there has been a lot of programs that put out to put the payment plans on a deferral. And as everybody knows, if you have a tax return due that should have been due on April 15th, that deadline has been extended. So we are seeing a lot of different information regarding COVID-19 in the tax world. And then for trusts and estates, if you have needed to file a suit, a legal suit, make yourself available to a court. Whether it's somebody like Kelly Murray, who deals with divorces and parties that are in divorce, whether it's somebody like me who's doing litigation through the probate courts, whether it's been an eviction. The courts have been closed in Santa Clara County. They are just now starting to slowly open up. Before, I think they shut right around March 15th, March 16th. They essentially closed, where they were only doing emergency matters. They were not, and emergency matters mean domestic abuse restraining orders, or criminal arraignments, civil harassment restraining orders, and elder abuse restraining orders. That is what they deemed an emergency. And we are now just in the, they are now just opening it up in some of the divisions, and they're trying to figure out their way to how to open up the courts in a very safe manner. For trusts and estates, doing sales is always difficult in a best of times. And because of the COVID-19, the market has cooled. There we've seen banks that says we're not doing cash out refis, we're tightening up credit, and that has impacted anybody who deals with trust and estates. So we, in my business, we're seeing it as well. And how to get the disclosure reports, what needs to be disclosed. There's a lot of questions and uncertainty about it. That is ever changing. One of them, we've been talking about insurance. What happens if somebody is COVID positive in a house? They don't die in the house, but they're COVID positive. What are the repercussions? What has to be disclosed if you are going to sell that house? Once again, this is an ever evolving area. So if you're in the real estate industry or affiliated with the real estate industry, it's always good to check for the most up-to-date information since our world is changing so rapidly. I think we have answered all of the questions that we have. So I wanted to thank everybody for attending today. Once again, if you have individual questions and you didn't want to put them in a chat box or have them answered live, or if you want to just reach out if you're watching this on a replay, or you now find yourself 15, 20, 30, 60 days in a transaction and you have questions about insurance claims, disclosure, or coverages, feel free to reach out to any of the participants. They each have a subspecialty and they each are coming from a place of service. They want to make sure that you get the information. I believe Jody will be putting up each individual participant's information on the replay.
Yes, I will.
So feel free, so you will have those resources available. Feel free to reach out to any of them to ask a particular question, or if you have a question that's very fact specific. So thank you very much. I'm going to turn the time back over to Jody to conclude the presentation. And once again, thank you everybody for joining us, and a big thank you to the panelists who gave so much time out of their day in order to enlighten us and educate us and talk about issues that are current today and are continuing to change. So thank you so much.
Thanks, Anita.
Thanks, everyone. Thanks, Anita.
Thank you, Anita.
Thank you.
Thank you, everyone.
Bye.
Thanks everyone for joining. And again, this is going to be recorded and we'll put it up. And if anybody has any questions, we'll definitely have everybody's contact information so you can reach out directly if you need to.
Sounds good.
Thank you.
Thank
Safe
you.
and well.
Bye.
Bye.